Good afternoon, everyone. Welcome to the 4th Annual Convening on Impact Investing. I know how it is when you come to meetings like this, you realize that you left without getting to know the person next to you. So can everyone just say hello to the person sitting next to you? And make sure that that investor you're looking for might just be beside you. So just make sure you do it. So it is my pleasure and honor to moderate this panel of leaders in impact investing, experts. My name is Thelma Ekio. I head SMENG. We're a gender lens impact investor, and we have an accelerator for women. And when I was looking at the agenda, I thought these are really the best people to talk about, unlocking capital for impact investing and identifying impact opportunities. And I'm going to start with, the conceptual question. I'm also a member of the National Advisory Board, and one of the things that we talked about in our meeting is this whole idea of, do people really even know what we talk about when we say impact investing? And it seems like people say to me, we create jobs, so we're impact investors. And so the question of what is and is not impact investing is usually a challenge, particularly if you're trying to grow an ecosystem. Conceptual clarity is very important. So I'd just like to give our panelists a chance to talk about the work that you do. Everybody's work changed as a result of COVID. So what I ask people is, how are you doing? How are you doing this thing? Because if you're still in business, earlier on someone said, hello Thelma, and she said, well done. And I said, what? She said, you're still in business. If you're still in business after COVID, you need to be congratulated. So my first question is, I want us to have a real discussion this afternoon. How are you doing as business? And, from your vantage point, what is impact investing? So I'll start with the person closest to me, Neka.
Hello, good afternoon, everyone. It's great to be here. I'm doing well. I think I've been, blessed in a way to make it through COVID, just given the statistics that Anna was reading off earlier today. Just being alive, I think, is a blessing. So I think there is something in that which I, think about very often, the privileges that I have, both in being alive today, and having access to these kind of communities, to these kind of conversations. So I'm doing well. And on impact investing, it's a challenging one, particularly in Nigeria, where a number of, I might classify them as impact investors, don't want to be classified as impact investors because of a concern about their stakeholder and investor expectations. And so if you have investors who are looking for commercial returns, they don't necessarily want you to talk about impact investing. And even as you're going out and raising capital from investors, if you talk about impact investing, they oftentimes think you mean below market returns. And so I think there's something, and that's not just in Nigeria, that's really globally. So I think there's something about broadening the understanding of what is impact investing and getting people comfortable with declaring themselves impact investors. I think it's quite bold to do so. And I guess I was in Kenya from 2009 to 2014, where there was a lot of impact investors starting to enter that market and investing. And the way they defined it was the intent has to be known up front and stated up front. And I think part of that is because otherwise you might not avoid the negative externalities of certain investments on the economy, on society, on governance structures, et cetera. So I think that's a big part of it. And I think without that intent and focus, you can often lose track and invest in things that are really just out to make a buck, but not really concerned about what's the medium-term transformative effect that it can have.
Thank you, Thelma. I think I'll take the same leaf on how COVID has impacted. I think it's very easy as a business person or investor to just focus with your colleagues, with work, with business issues, and very rarely do we think beyond our colleagues and work to what's happening in people's lives that could also impact their ability to deliver on their KPIs or what they've set out for themselves for the year. And I think for us over the past 18 months, we've tried to be more conscious about challenges people are going through, which they may never tell you in the office, never bring to your attention. People have lost loved ones, haven't said anything about it, or had other health or other related challenges. So I think for us, we've tried to be more attentive to this. And very quickly, it's even changed the way we've worked. 2 years ago, my team tried to get us to go and include remote work. I was very adamantly against it. And then last year, COVID forced our hand, and I think we've worked well, and we've been beneficiaries of having that flexibility to work. In terms of what impact investing means to us, and as context, we're a food and agriculture focused private equity investor. Impact is very important to us. We have investments in 7 states across Nigeria. This year, we've also started actively investing in 13 countries across Africa. So different value chains, all food and agriculture, and impact is the center of what we do. Now, I'll characterize what it means in 3 different ways. The first is, it's really about impacting people's lives, and doing so from a multi-generational perspective. And so when we look at investments, it's not just the financials and numbers, but how are we really changing the way business is being done so that it impacts lives of a broad base of different stakeholders. And then the second element of that is really thinking around corporate sustainability, because there's so many cases where you have companies that, while the founders are alive, do incredible work with all kinds of different stakeholders across different metrics. And then the founder passes away, and the community loses that anchor of a corporate that was having huge impact in the lives of people. So for us, it's how we're creating that sustainability, how we're looking at governance structures, the management teams, how decisions are being done, so that we can actually ensure that company is around for generations and is able to have impact in communities for those generations. And then the third bit I'll touch on for how we think about impact investing is, are we doing right by the stakeholders in the community? And that can be interpreted in many different ways. But as an employer or a corporate, you can choose to employ from the community, or you can choose to bring in talent from outside. How do you build that talent around where you operate so it feeds in? How do you invest in your supply chain so that as you do well, you pull along suppliers that have partnered with you to help you grow? And so when we think about investing, is how do we look across the different metrics to ensure that the companies we invest in and work with the founders to build are actually building generational businesses that can stand the time. And this not only has impact in communities, but if we think even from a macro perspective, we then have companies that can push the needle in terms of reducing unemployment, can push the needle in terms of reducing the dependence of imports, and can also push the needle in ensuring that as a country, or even countries across Africa, we have much stronger economic resilience.
Good afternoon again. So for us at Effects, everything that we do, we have at the back of our mind how it's going to affect or how it's going to impact the either the farmers we work with or the processors that we work with. Now, talking of COVID, how did we do during COVID as an organization? I would like to say that I think we're always forward thinking, because 2 years before the COVID, we had said, okay, look, to have good work-life balance, we had started the work from home process. So when COVID started, it was easy for us to, well, not easy, but we were able to, to keep working and keep doing things that we had to do. And then another thing the COVID did for us is that it just brought to fore the last mile connection with the farmers. That's one of the problems we have. How close are the farmers to the processors? One of the efforts we have in FX is that we locate our warehouses close to the production sites, that's to the farmers. And so during the COVID period, it was easy for the farmers to still keep doing their production and take their commodities to the warehouse, and they would still get paid. And it was easy for our processors who also worked with us because we had the commodities that would enable them continue their production, because most processors who are not on our platform work through traders and they do not have direct access to the farmers, but we were able to bridge this gap during that period. So for us, everything that we do is to see how it will impact the people that we work with, and not just to say we're going to impact your life this year and next year there's a lull in how you operate or how the impact on your life. So we try to ensure that once you do something this year with us, that you're coming up better the next year. So in the first year, probably you worked with us with 1 hectare, but due to the business that the market we've been able to create for you, you could increase to 2 hectares, or with the farmers, you could move from being a farmer to an aggregator. So for us, that's what, like I said, everything that we do is to see how we impact and to better the lives of the people who work with us, either the farmers or the processors or anybody along the agri value chain.
Thank you.
Hi, let me observe all protocols and say it's a pleasure to be here this afternoon with these distinguished co-panelists. My name is Mira Mehta. I'm the MD and CEO of Tomato Joss, which is in Kaduna, not Joss. And, I guess first to talk about how we've been this past year, I think echoing Neka and Mezuo, we as a management team have started to take a much bigger focus on health generally in our organization and with our employees. Right now, Tomato Joss works with over 2,000 farmers, and we have over 150 employees. And we've started really trying to incorporate healthy living into our activities. So we started the Tomato Joss Football Club to try and get people to move. We've started to incorporate talks, and we had the entire team get tested. There was a COVID scare last December. We had everybody go and get tested at the state government facility. We've done a lot of health talks, had people come in to check blood pressure, have found out that some of our guys have high blood pressure. There are all these things that we don't think about that are really important. And it's led to me trying to shift my leadership style to a safety-first style, where if my employees know that I care about them and our top managers care about them, and that their safety is paramount to what we're doing, and this is also applicable because Kaduna is an area right now that has some security challenges. If we can really underline and reinforce the fact that we care about keeping you healthy, keeping you safe, I think that will translate, and that is translating into a more productive workforce. Operationally, we had some definite issues. The roads were shut down during the lockdown. We had a lot of tomatoes that went bad because we weren't able to process. We were building a factory at the time and construction got shut down. So there were a lot of actual operational delays as well. But I think for me, the most important things to come out of it were that we did come out of it, and that we're really trying to shift our focus as a leadership team. In terms of what impact means for me, I guess the way I've tried to structure Tomato Joss is such that our profitability as a company depends on the sustained profitability of the smallholder farmers in our network from whom we source tomatoes. We're a tomato farming and processing company, and who are all living at the base of the pyramid. So we feel that we must invest in our suppliers to enable our suppliers to consistently sell to us, and to only sell to us, because we don't want to have side selling and things like that. But the way to do that is to make them profitable, and the only way that we can really ensure that is to make ourselves reliant on that profitability, and that's how we've structured our business.
Good afternoon, everyone. Good to be here. I kind of like the questions you asked. I actually like the little exercise you had with everyone. In terms of how am I doing, I think I'm doing okay. This is my first time in a suit in over a year. I wasn't sure if I was going to fit into it. I'm glad I did. I believe our team at Kuramo Capital, we're all doing well. We've, just like everybody else, had to adapt to working from home. And so that's working great. We're checking out each other at least a couple times a week. So we come through well the COVID period, thankfully. I know Itema was very nervous about me being here. She just came in from New York. She was calling me as I was sitting down to make sure I made it. But I made it okay. And when you and I were talking about the choices for me to speak here, she mentioned this panel. I heard that Mezo was going to be in the company of 4 women, and I said, this is definitely the one to be on, so I can give you some company. Anyway, I'm Wale Adeosun, Kuramo Capital. Impact, we come to impact differently. We're kind of like the group Mecca was talking about earlier. The video you saw earlier said something like, I think it was 150 trillion naira. It said that Nigeria needed for SDG goal, to meet the SDG goals. So that's where we kind of came across this, like, all right, so there's this huge need for capital, right? So where is the capital? If we go to where the capital is, we have a better chance of really addressing most of our SDG needs. So work with me. So there's like $270 trillion out there of like commercial capital, global commercial capital. You know, some of the largest institutions, the BlackRocks of the world, are like $5 trillion. So there's that 270 trillion. There's a group of DFIs, I don't know, maybe 20 of DFIs or so. I don't know, if they each even control 10 billion, that'll be $200 billion. New York State Common Retirement Fund is $200 billion by itself, one entity. So the way we came across was that, look, if we go where the money is, which is to commercial capital, and if we're able to just get 1% of that 270 trillion, we can address most of the needs that we have on the continent and in Nigeria easily. So our focus at Kuramo Capital has been on catalyzing capital to the continent and catalyzing capital in Nigeria really fast. We believe that pretty much everything we do has impact. I mean, I think this new wave of impact investing is helping put some structure around it. Yes, I understand the need to have intentions when you go in, but the truth is pretty much every investment we've made at Kuramo Capital has significant impact. We've changed the lives of the people that work for us. We've increased the number of jobs, quality jobs, improved governance, right? Improved the lives of people in the communities. There's really no investment we've made that would not fall into that category, and I can even go into the detail on some of it. So for me, I think in this part of the world, pretty much every investment we're making is really impact. Should you be able to measure it? The answer is absolutely yes. But I think we have to be very careful about some of the metrics from the developed world, right? Because, you know, the BlackRocks of the world, when they make investments, it's not generally about impact. So they need that clause about intentionality and measurement and stuff, so you really know they're actually making impact investment. That's not our case over here, right? I mean, you talked about tomato jars, impact investing, maize oil, everything you guys do in agriculture. We invest in power here. We invest in the largest independent power producer, and that creates jobs, right? We provide power to pretty much most of the water you drink in Lagos is powered by us somehow. 110 kilometers of street lighting, we provide hospitals, we provide power to. So in our world, we believe that everything we do is impact investing. And I think the most important thing we've done is the fact that we've gone to really catalyze new private equity groups. We've catalyzed over 15 of them as anchor investors. They've all gone on to raises over $100 million plus. I mean, we calculate that number as in excess of $3 billion that's been available to people to invest, to create jobs, improve governance, and improve the lives of communities. So for us, impact investing is really all-encompassing of what we do. It's just not the structure, impact investing that people talk about.
Thank you, everyone. I think, Mr. Adeosun, you hit the nail on the head. It's about structuring and using a language that everybody recognizes globally. So when we say impact investing, there's a global framework for understanding. I think that's just the benefit of this, but there are people who certainly have been doing impact investing before it was called impact investing. And so I'd like to go on to my next question, and the investors in the room, the investors online, and all of us who engage with international audiences often get the question about, you know, Nigeria's market is huge. What should I be investing in, or what should I look at when I'm looking at Nigeria? So I'm going to go to the capital providers, or Mezu, Neka, and Mr. Adeosun. I'll start from Mr. Adeosun this time. Just tell me, quick, if somebody said today they wanted to give Kuramo Capital 100 million, well, that might be too small for Kuramo Capital, but if somebody wanted to give you that for Nigeria, what would you tell them? 2 sectors you tell them to look at.
I mean, that's easy for me, right? It's power and agribusiness, right? Food security is key. You know, I think the interesting thing about food security, obviously, is and agribusiness, it addresses a lot of issues. It creates jobs. We have an agribusiness in Nigeria, in cassava, in Kogi State. Well, Mezu's in that with us. I guess I should let you talk more about that, because you're actually on the board of that. But I'll talk about, you know, like, and then we also invested in the palm oil business that generates revenues in dollars. So you get hard currency, so you don't even have to export. So you get that hedge, currency hedge that people talk about. So agribusiness all across the value chain, frankly, is super exciting. And obviously power, which is what we've done as well. Like I said earlier, we're the investors in the largest independent power producer. It uses natural gas, which is cleaner. We've gone from like 5 megawatts to about 50 megawatts with the goal of getting to 200 megawatts. So power and agribusiness would be my 2 favorite investments.
Thank you. Mezu.
Thanks. I think wherever there are hard problems, there's also the opportunity to have impact. And of course, it's power, it's agribusiness, it's healthcare. And for us, we are focused on food and agriculture. I think that's really where we feel we can make the mark. And for many different reasons. There's food security that I think it's very important. But it's also just taking a step back and saying, separate from the challenges, how do you match that challenge with the opportunity? And we have a very large population that's going to add probably close to 70 million people over the next 10 years. How are we going to feed these people? The people need to eat. The food has to come from somewhere. Are we going to import this food, or are we going to build businesses that can actually serve the needs of these consumers? At the same time, you have food supply chains that are changing dramatically for many different reasons, driven by public policy. A lot of policy now is trying to encourage import substitution, building of local champions. But separate from that, there's also the impact of COVID, where you had companies around the world realizing that just in time may not necessarily be good. A supply chain resilience is very important. And how do you ensure that the chain from farm to factory to consumer is relatively short? And if you think from that perspective, opportunities where we can invest in agribusinesses that have domestic supply chains producing goods for consumers in this and regional markets, there's a huge opportunity there where you're meeting that need and demand, but also solving problems around food scarcity, job creation, and a range of different issues. You also have changing demographics that have some impact, and it's urbanization, it's large youth population, it's how you, and this comes with its own range of issues. So it's, with urbanization, people moving rural, urban, it's putting pressure on infrastructure, it's putting pressure on even how do you get food to these consumers, and how do you think about that network of services that you bring to then, solve this issue. And I'll give one example of, and I won't use Crest Agro, I'll use a different example. The Crest is doing incredible work. We have a poultry operation in Kwara that effectively rears birds, produces broilers, frozen chicken that's then sold into the market. Now, during COVID, there was a huge shock to many different businesses, including poultry companies, because if you can't go a day without feeding your birds. So you can't just say, well, I'm quarantined, there's an issue, I'm going to skip a day or two from going to the farm. There's an issue. At the same time, you need to get food to consumers. The channels to get to consumers was changing. Supermarkets closed, fast food restaurants closed. There were changes. And many smaller poultry companies couldn't compete and close down effectively because it's much harder for them to engage with the market. Our poultry company, Dainty Farms, at the time had 75% of its input broilers being produced on his own farm, and made a business decision that was win-win for smallholders. It's how do we reduce the risk on our operation from having this concentration of production in one place in case there's a health issue, and decided to then, led by the management team that's done an incredible job, push and pull in a broad range of smaller poultry farms that could supply broilers to the farm to then process. Whereas where today, probably 75% of our broiler input comes from third-party smaller poultry farmers, which is a complete reverse of a year ago. And now what does it mean? Now from a business perspective, we've just reduced risk. It's not being concentrated. So if there's a shock, we're going to survive. We've also now been able to increase production beyond our capex and production constraints because we're now not dependent on our operations to now produce those volumes. On the other hand, we've had huge impact because the range of smaller poultry farmers that were at risk of going out of business now have a potential off-taker to take that broad range of supply into production, and then we have the ability to now distribute. So win-win, very clear business decisions fundamentals to make, at the same time having huge impact to the community and small business owners. So for us, thinking about impact is mirroring those two things of impacting key stakeholders, but ensuring it's also anchored on key business decisions.
Thank you. Neka?
Meswell started to highlight a number of the macro shifts that we're excited about. So whether that's urbanization, whether that's the large youth population, the emerging middle class, the importance of the African diaspora, as we saw from last year, as well as elements around the existence of arable land on the continent and in Nigeria in particular, as well as mobile connectivity. I think all of these are areas of interest from a macro trends perspective. Then you say, what about Nigeria? I am an Aggie as my background. I can't run away from agriculture. I think many of you will know that from the work I've done over the years. And we are surrounded, well, I think we're surrounding the agri people who are really doing the work. But if I'm allowed to list a longer list than two, so the way I think about it is there are some basics that you need to be alive. So that's food, water, and sanitation. That's housing, healthcare. These are the things that actually keep people living their life. But then beyond that, you need to think about how can somebody actually thrive and grow. So then you have to start looking at how are they actually going to be employed, what about education, mobility, what about creativity, which I think is such an important part of life. So I don't think I can pick just one, but I will say agriculture is how I got into this investing side in the first place. And so I don't know if Mira tells this story, but I've been telling it all this year since I made the transition into investing. I met Mira in 2011, I think, in Ethiopia, where I was supporting the Agricultural Transformation Agency. And in the years since, it's been amazing to see what they've been able to deliver for agriculture there. And years later, when she moved to Nigeria, she reached out and said, hey, I'm doing this crazy thing, or so I thought. And I had started investing in agribusinesses because that was my knowledge. I had started investing in agribusinesses, and Vested World ended up leading an investment into Tomato Joss in 2017, and Mira was raising a friends and family round alongside that, and I was very happy to participate. years later, this is how I joined Vested World as a managing director. And, you never know what your path is going to lead to, but I think agriculture for me has an importance given my own experience, but also the critical importance of food. I think we can't miss out on that, whether that's about the low birth weights that can occur if women are undernourished when they're, carrying, or it's about the long-term impacts of those low birth weights on, education, potential, et cetera. So I think there's many, many areas to invest in Nigeria. Obviously, a number of risks. 40% of our investments have been in Nigeria. We invest in early stage companies, so we're one of the, I think, the first institutional capital into tomato juice and generally play that role. We've invested in health businesses like Drugstock, who are really trying to transform the way pharmacies access high quality medicines and the challenge of, 2 to 64x prices for medicines in Nigeria versus in other markets. We've invested in Beacon Power Systems, who is working with 100% of the discos that cover Lagos, helping them improve their metering, as well as consumers to understand what they're actually being charged for, as well as in Tarragon, who's really helping small and medium businesses grow through access to customer data, access to media outlets. I'll pause there.
Thank you. I think I have an agri panel somehow, but there are definitely other sectors. So if you're in another sector, don't switch yet. We'll come to that. So we'll talk about this whole idea about impact measurement. I think anybody who's tried to raise capital, you're bombarded by all the ESG forms you have to fill, and it's become a cookie cutter process. And I think more and more people are challenging this to say impact measurement should be contextual. I think there are other things that we should look at behind all the box ticking that goes on. So I'd like to come to Mira and Samira and just talk about, from the work that you do, not so much how impact is currently done, but what you'd like to see. Because I think, impact investing that really reflects the contextual realities of Nigeria is what will make the sector thrive in the long term. So I'll start with Mira and then Samira.
Oh boy. Well, it's interesting, that you ask about the impact measurement. I came initially from BlackRock, actually, and then went to my first job in Nigeria in a nonprofit sector, where I had to do a lot of reporting for our donors. And what I found, which may be controversial, sometimes I like to push the controversy button, is that a lot of the impact investors often end up sounding like donors. And from my perspective, NECA mentioned this idea about impact investors offering commercial rates of return. The flip side of the commercial rate of return for me, and probably for Samira, is the cost of capital, right? How much is it costing us to access this capital? And we accept the constraints placed on us by grantors because that cost of capital is free. But when we're asked to provide all of these super detailed pieces of information, specifically from my perspective, that often are about outputs and not outcomes, about the number of farmers trained or the number of people that you talk to, but not about what actually happened. And so, we have a whole team that makes me feel like I'm still working at an NGO sometimes that does all this reporting because people are requiring it. But from my perspective, while it is very important to measure what we do, I do still have that plea to, a lot of the investors to say, look at what is actually important to measure. And I will highlight, I don't want to turn this into a Vested World love affair, but, Vested World is one of those organizations that, doesn't impose these lengthy quarterly updates on us, right? They are engaged with the business, they're engaged with the management team. They're not engaged in an intrusive way, but they're engaged in a way that enables them to then report out to their LPs on whatever it is that they need to do without making us feel overly burdened by their requests. Another example is the Acumen Resilient Agriculture Fund, which is another investor in Tomato Juice. They actually have a third party that they pay for, because one of the questions you asked for was who should pay for the measurement. Acumen has a third party that does their own assessment of our constituents without us having to pay for it. And that's another method that I feel is super helpful, because we get all this information about the people that we're serving, but we don't have to take time out of our day to create that information. So let me leave it at that.
Okay, slightly disagree with you about the reporting. I think, oh, okay, sorry about that. I slightly disagree about the measurement. For us at IFEX, we had just recently done a 5-year impact analysis. We have a report on that. And for me, whilst it is burdensome, yet it takes a lot to get all the data and trying to get all the information together, but it actually opens room for more investors, because when you do the report, it gives some kind of transparency to what you have done. And it actually, for the investor who has, well, an impact investor, there are certain things you want done. So what is the report, the measurement, whatever metrics has been set up, again, I think the metrics should be participatory between the investors and the user of the fund. So once we can say, okay, look, you gave me this fund, this is what it was used for, the investor could come up and say, okay, yes, I wanted this impact on it, but probably have not utilized the funds the way I want it. Maybe we need to change your model, or maybe I should focus on some other impact. So for me, measuring and putting out the reports, yes, it's cumbersome, but it's something that is needed to be done for transparency, to see if you need to refocus the business, or to see if you need to give more funds. So measurement. Yeah, the question about who should bear the costs. The costs, in my opinion, should be borne by the recipient of the fund. But then again, it now brings to question, if I'm paying for this report to be done, am I going to put, again, a matter of trust. The information I'm putting out there, am I putting it to suit my business and to get more funds, or am I actually putting out the report that is accurate? So it calls in mind for a third party. It could be like this foundation doing it, or like a chartered accounting firm like do for companies, for them to vet and to see, to be sure that the report I have put out there is actual, is factual, and that way it just brings transparency, and just, for me, it will attract more donation. Because I tell you that since our reports came out, there's been a lot more inquiries on my company, IFEX, to see what we have done. Well, while it has not yielded any impact investment, but at least it has put us more out there to see what we've done and the impact it has done in the economies in which we operate.
So if I hear correctly, I think everyone agrees that you have to measure impact. It's how it's done. And I think one of the contributions that IIF and the National Advisory Board can make to this whole conversation is, context-specific indicators. Because often the indicators are kind of imposed, and you want the money, right? Especially if you're a new company or a new fund, you tend to want to go for what is available. Did you want to add something?
Well, I just wanted to add the fact that I feel like it's all about the structure, right? And people trying to understand the structure, and then some of the metrics that work in developed world, where really impact investing is not what people do, right? So for example, if we invest in tomato juice, your goal is to increase your revenue. To increase your revenue, you have to scale. To scale, you have to hire more people, I suspect. You hire more people, you're improving the lives of more people. You need more inputs. Those inputs are mostly local. More jobs for more families, more local. So if you can just keep on going through your supply chain and everything you do about scaling, if somebody invests with you, that it's going to be impactful, and you can measure it in a different kind of way.
Very important. I think one of the things that having a critical mass of actors working together is investor education, the point you made. How, you're also educating the people that are giving the capital into Nigeria, Africa. But now we're going to a topic that I like very much, investing in women. And often you ask this question, somehow the questions always go to women, so I'm going to ask the men. AFDB says that there is a $42 billion financing gap to women entrepreneurs in Africa. And then recently we've had the 2X Challenge, which is a $15 billion commitment to finance women globally, of which Africa is one of the focus continents. So starting with Mezu and then Mr. Adeosun, how are you tangibly, I'm not talking about saying in your strategy document, gender is a cross-cutting issue. That's not what I'm talking about. I'm talking about tangibly as a fund manager and a player in the impact investing space. How are you investing in women?
So tough question, but and I actually expected you would ask me first since I was on the panel, but I'll answer it in a couple different ways and from two different perspectives. So the first is beyond just investing in women, is also thinking about our team itself, the composition of our team, is thinking about the portfolio companies themselves, that team, the board composition, and what does that look like? And it is not easy to influence certain outcomes, but I think it's important to do work to get to that point. So starting from closer to home, 2 years ago, for example, realized that our investment team was effectively 95% women, which didn't make sense. So we then made a very conscious effort over the past 2 years in our recruiting to change that investment team composition, and which effectively meant that I was refusing to look at CVs of men, and very consciously. And where we are right now is that if you exclude myself and my other partner, our entire investment team is entirely women today. Now, will it remain like that? I think as we grow and add people, then the team will, it's a live thing, it will change. And now on the investment side with how we invest, we don't particularly look for women entrepreneurs, we look for entrepreneurs. And we engage with the entrepreneurs that we come across. Now, what is interesting to me is that in quite a few of those businesses, especially when they are family-owned and husband and wife businesses, you have situations where the wife may have been one of the founders, but the husband is in front, or some other dynamic. So if you then characterize with who is speaking for the company, then it's male-led. If you take into account that, especially with family-owned businesses, that is actually a very strong voice as well alongside, then it's, so it depends how you look at it. But I think we don't have a gender lens per se, but we pay attention to how do we find good businesses and recognize that there are strong women entrepreneurs back in those businesses. Now, from a different perspective, I also want to say as investors, there's effectively a hierarchy. And to put it simply, not all investors are equal. And I want to put the context. So Wally mentioned that the trillions of dollars overseas and the DFIs. And if you go down that hierarchy, there's Kuramo Capital. And Kuramo Capital, before the rest of us, so there's Kuramo Capital that has backed quite a few fund managers across the continent. And if you look at the number of fund managers that are run by indigenous people 5 years ago, and today there's a night and day change, many more GPs in the market. Kuramo has been very instrumental in backing many of them. And then you have the other capital providers. I don't know, I won't put vested well, but I'll say Sahel Capital. That's capital to deploy. Now, I am giving that context because you effectively take your investors, and so we have investors as well, give us guidelines and KPIs and deliverables of how we're supposed to deploy that capital. And we also put forward a strategy to them that they back to then we implement. So in that context, we have to be very careful that the way we say we're going to invest is how we're investing. And so for those that decide that there's a gender lens that they're putting forward, then it has to become very clear in how they implement. And at the same time, with us putting forward, it's an important component of what we do, but we also have to be very careful at the same time that, and going beyond gender lens investing, it's even impact, it's what are we measuring? Is it jobs we're measuring? Is it number of small farmers? And you find different investors have different things that they want you to focus on. So you have to be very careful and balanced and then say that I'm going to implement strategy as an investor. These things are important, but how do we then approach that? And then one last comment on this is, and I'll put this probably as a risk area, I mean, maybe it's going beyond gender lens investing. It's as we then look at investments, we have to be very careful about, is it the investment story that's driving the investment, or is it the commercial fundamentals? And then tied to that as well is understanding the risk profile of your investors and what they want when you allocate capital. And that trade-off between return and that impact. And balancing that as you then figure out how you make investment decisions. I'm conscious I've moved beyond gender lens investing.
I'm just thinking about how I have to lobby Mezu to have a gender lens, because Sahel is one of the leaders in this space. So we'll come to you, Mezu. Yes, Mr. Adeosun.
Thank you. Mezu, I'm actually impressed that you now have, what, you said 80% women in your investment? On the investment team. No, that's pretty good. You're an outlier in the industry. The industry is the reverse. Because at Acumen Capital, I was going to brag that we had 50%. And now you say 80, so that's a tough one. But the issue of gender is a very important one. So when we started Acumen Capital and we started investing in managers, at least anchoring managers, and then we looked at what we had done. We'd anchored 15 brand new folks. Of the 15, we anchored women twice, but it was the same woman in Ethiopia twice. We all know who that is, right? And then we said, wait a minute, we're definitely excluding a significant percentage of the market and the opportunity set out there. So we've been very intentional about what we do in that area. What we were doing with groups was really providing advisory services to groups, trying to get them ready, sharing the knowledge in terms of how to raise capital, and then giving them access to our investment community as well. So luckily, I guess maybe this is a forum to share this. We started a conversation with, God bless his soul, Innocent Chukwuma of Ford Foundation, and we're working toward a product that would have 3 different modules, if you say. The first one being an accelerator that would really identify potential women that are out there that either want to raise a fund or have been thinking about it, but I'm not sure they can quite make it. So we'll accept folks into the accelerator. We'll make sure the accelerator is kind of grant funded so that you really don't have to pay to come in. And then we'll provide all of the necessary facilities and counseling as you go through the accelerator. I actually have my colleague, Farida Usman, who's in the audience here, who's been leading this effort on behalf of Acumen Capital. And then from there, you'll graduate to where we'll raise a fund, and that fund will be an anchor to those that graduate out of the accelerator program. And then the third aspect of it is having a shared services platform that will help all those new private equity managers in terms of back office, legal, operations, all of that stuff. So that's an effort that we've been working on for about a year now. We're very happy that we found some partners. We're also talking to the IFC about helping us in this area. So we're hopeful that this will be something we can launch very, very shortly.
That's really exciting. Just in terms of information sharing, DFC, CDC, and the other 2 ex-partners are looking at doing a similar thing. So it'd be great to have an indigenous one for Africa. Well done on that. I'd like Nneka to comment on this because, I mean, everyone is happy about the 2X challenge and the 15 billion. But the question on all our minds, how does it trickle down? And how will it actually get into the hands of female entrepreneurs?
Yeah, it's a tough one just given the data. There's a few people who've been collecting data, especially on the sort of tech-enabled or tech ecosystem, where you have less than 24% of the capital going to women this year, and that is I think 10% of capital went to one company, so, which we all know from Ethiopia. So it's highly concerning, I would say, where we are, and 15 billion is a start, but it's definitely not nearly enough capital to bridge the gap. So it's great to hear about other programs, hopefully even outside of the 2X challenge. I think one of the things is the bar is relatively low, and so I think most people should be making commitments along the lines of the 2X challenge, which one example would be 30% of women-owned or founded businesses that you're investing in. I think that's fairly easy to do. And so if you're not doing that, then the question is, are you really seeking out the best returns for your investors? Or are there biases driving your investment decision making or even your ability to source deals, whether that's because of your networks, your market focus, or whatever it might be. So find a way to just meet the bare minimum of the challenge, I think, is one thing. But we are, especially in this early stage venture space, 98% of international capital is owned by firms that are owned by white men. And so you can imagine how that might trickle down, where 70% of venture capital invested into the continent, whether it's through funds like ours or otherwise, is coming from the United States. What are those sort of biases that might be driving some of those investment decisions? So I think investing in funds that have, putting ourselves up here, female GPs is quite important. I think my partner's bringing me into the general partnership, and we can talk about what that means, but essentially I own a part of Vested World, which does change the dynamics of the decision-making at the most senior level. So I think that is definitely a part of it, bringing in more women into investing and supporting the women who are already there. I think the Impact Investors Foundation in this convening has done great in terms of having much more representative panels than I've been seeing over the last year. As Thelma knows, I've been complaining about all of the manuals in Africa investing. I think it's past time for us to change the narrative, and part of that is in conversations like this. And then finally, I think women-owned businesses, a number that we have invested in, not all, but a number that we have invested in have waited to raise capital rather than going out and raising $2 million seed round, flashing it, on television and news, and going to Y Combinator and all these other things, which are great, but they aren't necessarily raising. They're bootstrapping their businesses. And so if you're a venture investor trying to invest into this business, you really do have to buy into the vision of where they're headed, because otherwise you might look at another business that did raise all this outside capital, see their early growth, and think that they know what they're up to and that they're the one to back. But I think there's something about having, yes, the commercials being there, but also really understanding the vision of this entrepreneur, what they've had to navigate, and why their perspective and their approach to the solution might be different and attractive as an investor. So hopefully that answers your 2X question, but I think it's really the bare minimum, especially if we're trying to bring returns to our investors.
Absolutely. Thanks for that. My last question to the panel, I'm conscious of time, and then I'll come to the audience, so please get your questions ready. What COVID revealed to all of us is that the technological divide in Nigeria is severe. We're essentially two different countries. It took businesses in the north and different parts of Nigeria a lot longer to migrate to online platforms than it did in Lagos, Abuja, Kano, Port Harcourt. Essentially, when we're talking about many of the things we are talking about, we actually mean Lagos, Kaduna, Kano, Port Harcourt. So how can, both from the perspective of capital providers and on the demand side, how can we bring in technology and support, tech-enabled businesses from any vantage point? Let me start from Mira.
Thank you. I like to talk about technology. I'm in agribusiness. I know we've been talking a lot about agribusiness, but I like to talk about technology in a broader view than just communications and information technology. We talk about technology, and oftentimes what we mean is ICT technology. But I think that there are all different types of technologies that can really help to support and drive growth in businesses in any sector. In Kaduna right now, which is where I live and where my business is, we actually have major ICT problems, temporary but real, where outside of Kaduna and even in some parts of Kaduna town, there is no cell phone network by intention because the government is conducting security operations, right? And so, we have this desire to move to a tech-enabled platform in a lot of ways, but in a similar way to, Ms. talking about how just-in-time supply chains got really disrupted and the last-minuteness of everything with COVID, really ended up having these extraordinary negative impacts on businesses. We have a very real fear in our part of the country that over-reliance on technology, on communication technology may end up causing disruptions if there are, as long as there is not a stable level of basic infrastructure, and I include basic telecommunications as one element of basic infrastructure in the same way that I include power and roads as the two other elements of basic infrastructure. And this is my plea to the government, is like, please, 3-point agenda, telecoms, roads, and power, and then let the private sector do the rest. Because we have a very real fear of adopting technologies that we won't necessarily be able to use on a consistent basis. Our farmers don't get text messages, so text message and SMS systems to remind them to do things doesn't necessarily work in our part of the country, right? And so we're limited by what we can even access because of that. Broadening it out to look at, the more basic levels of technology, we are, very excited about embracing and introducing to the farmers in our network more precision agriculture, more of drip irrigation methods that are, less intensive on water resources, using more high-tech methods of fertilizer application, which doesn't sound technological at all, but which can really have huge improved impact on the environment. By the way, we didn't really talk about the environment in our impact discussion, but that's another whole other thing that could probably have its own panel. So when we take that broader lens, there are a lot of touch points for tomato jaws specifically, but for us, our ending plea is, please help us get that foundation that, most other countries have that would really drive growth across the board, across all industries.
Thank you. Samira.
On build up from what Mira has said, we all want to go to technologically wise. We had the challenge in my company. We tried to register, because first of all, let me start by saying that when we want to do technology, we should think about the environment in which we work with and come up with solutions for the particular environment. You can't go into Kaduna or Katsina, parts of Katsina, and want to use a 4G when even the 2G is not working. So we need to take into cognizance who we're working with and where we're working. So like I was saying, we now try to register farmers online, and try to put all their transactions online. Again, because of the challenges of the infrastructure, we couldn't do this. So we had to devise other means in which to register them. But having said that, we do have a platform where we work with, it's called the Comex, where farmers could, farmers or their representatives could go onto the platform and do some form of sale. They could, put up their product for sale, and they could get buyers on the platform. Again, whilst they cannot do this directly, we're doing them through agencies. Then to register them or to, register whatever product they are, we do it offline at their sites, and when we get back into town where there's a connection, we would upload it into the system. So basically, when we're thinking of technology, we should think about who we're working with and where we're working, the location and the people we're working with, to make sure that the technology aligns with this class of people.
Yeah, so we invest across all asset classes and sectors, and definitely invest quite a bit in technology. We actually anchored the first venture fund in West Africa in 2014. And obviously the explosion in that sector is just phenomenal. I think technology is going to disrupt pretty much everything we do, any sector, as we go forward. And so the earlier we embrace that fact, the better. I think the rate at which that's even changing is even faster, given the fact that a lot of these tech funds are just getting funded from outside. Like Mika said, they get into Y Combinator, those kids become millionaires. And it's not going to stop. It's going to continue. So it's really going to disrupt pretty much every sector. And so the quicker you can adapt technology into whatever you do. I know what we do in a farm that we own in DRCs, we're using biometrics right away to identify our workers, to keep track of their time flow and how much they contribute every day. But it's just real that technology and the disruption is here to stay.
Mezu?
We've just invested in a tech-enabled firm that is looking to dramatically change how food distribution is done. And so we are keen to do more in tech, especially if it's there are very clear links to solving problems within the food and agriculture value chain. With that said, I'd also like to mirror Mira's comments about the challenges as well about leveraging technology. And over the past 4 years, we've met and engaged with a broad spectrum of firms that would, in theory, well, the pitch is that they would change so many fundamental things. And well, the way we approach it is, okay, let's see if we can test it in our portfolio companies to see if there's really value add. And, you know, for the most part, it's not had that impact we've seen or been able to lever it. And one of the reasons why is that many of the companies, at least speaking from the agribusiness sector, are dealing with more fundamental issues before they're even thinking of technology. And by that I mean, what seed are you using to plant to get the right yield output? And how do you tweak that seed, farming practice, et cetera, to get the right output? How are you thinking through supply chain issues? And so it's brick and mortar issues that in many cases need to be solved first before you can then think of potentially using big data or, you know, aggregating this to figure out how to then take it to another level of efficiency. So for example, there's a South Africa-based firm, I'm forgetting the name, I think is Aeronomics, I think is the name of the firm, but they Africa-based, gathering data, but their clientele is in the US. So it is because you have agribusinesses there that are able to use that kind of data to improve the efficiency of the operations, but it's much harder to implement that on the continent. And then of course you have issues such as if you don't have network, how do you even get access to use this tool wherever you are? And it's across the country, separate from do they have that right device. So while there are opportunities as well, I think it's also being very careful that we recognize that brick and mortar issues that need to be solved first before we can get the full benefit of that technology.
Yeah, Mezu has really just talked about our investment thesis and laid it fully out. I mean, we invest in tech-enabled businesses and very much believe that investing in tech for tech's sake is not the way for Africa. We really need to figure out what are those issues that need to be solved and how can technology really unlock significant scale. And significant scale means not just urban, it means not just the top 10% of the population, partly because that's not the most exciting part of the addressable market. And so I'm very pro-technology, as you can hear from, from my voice. There are 1.2 billion people in the world who do not have access to mobile connection, and I'd say that's very much overlooked in a way by mobile network operators, partly because their general technology infrastructure is very expensive and requires 20,000 users in order to make it make sense. They oftentimes are diesel powered, and so they have to deal with bad road networks, getting diesel to and from their infrastructure, and so how can they actually make it work? We invested in a company called Vanu, and they specifically have proprietary technology they've developed to build small cell networks, which need only 700 users, are at a much lower price point than a mobile network operator, and are solar powered. And so they can actually, with just $2 in terms of average revenue per user per month, operate these cell networks profitably, and they work across about 13 countries now. I think these type of solutions are going to be important for really getting to that next level of scale. And to a point from earlier, I think Mira had made, you know, let's say we have hundreds of millions of SIM cards in Nigeria, how many of those are actually on the network? So not just about the number, but what's the impact that this coverage is actually happening. I think that is going to be critical. I think the work the government has tried to do in terms of reducing the cost to actually expand the fiber optic network in terms of cross-state border crossings and this type of thing is going to be critical. But I think there is a role for private investment in this as well, because we know it's going to take some time before fiber optic connectivity reaches not just north, but to the southeast, to the center of the country, et cetera.
Thanks for that. I think just to add my voice to this, Tony Sani earlier on talked about financial literacy. One of the important things we have to look at in terms of technology is digital literacy, and how we're talking to a populace that's largely digitally illiterate. And we're having that experience now in trying to, you know, we're going live soon with the first non-bank all-women's e-commerce platform, and it's an education in itself, just basically getting women to load their products onto the platform. And the other thing that it has taught us is that you can't do this type of work alone. So you need government's help with intellectual property legislation that doesn't exist at the moment, online issues around human trafficking when people come onto that platform. So I think, you know, our brother from the Investment Promotion Council, these are things, easy to say we should join the African Continental Free Trade Agreement, but in terms of our digital infrastructure, there's still a lot of pillars that are not functional, and we have to make that work. And I think this is another area that the National Advisory Board on Impact Investing can work on in terms of advocacy. So now the floor is open. I don't know who's helping us with the online questions, but I'm going to take 2 questions in-house and then go online. The lady on the left, and then I see a gentleman on the back, at the back. Is that it? Yeah, I'll take both of you.
Okay, thank you. Good afternoon, everyone. My name is Ene Onwuka. I represent Kunoski White Food Processing firm. It's a small SME. I want to take cue from what Dr. Chichi said about finding opportunities in the midst of challenges. In 2013, I lost my dad, and what I discovered was, at that time, the average life expectancy was about 51 years. Today is about 55 years. The American Heart Association has actually did a research, and from one of those researches, they claim that consumption of millet and whole wheat grains can actually go ahead to reduce hypertension, diabetes, which is what a lot of Nigerians and even in the whole world we fight against today. So my question is, there was a time actually I went to present my pitch, you know, for investment, and I do kunu, zobo, tiger nuts, and the investors told me this is local. So how do we encourage our local production of some of these, you know, drinks, which are actually really healthy and can actually help to fight and combat diabetes, hypertension, and stroke, all these ailments that we fight against today? How can we encourage investors to look into that, do more research, and encourage people to eat healthily so that we can actually increase the life expectancy of Nigerians today? Thank you.
Okay, who wants to tackle that one? Go ahead.
I was actually a bit surprised at that investor's reaction, and I think it's also to recognize that when you look for investors, you need to then make sure that you have the right partner for your business. based on the stage it's in terms of size, because the investors that look at different sizes of business, as well as how early or developed it is, and your values, etc., align. So not every Naira is the same. So just to make sure you pay attention to the provider of capital, to who is appropriate for you. Then on that particular point, it caught my attention because I think it's easy for some people to dismiss locally produced packaged food, whatever it is. And at the same time, there's a huge opportunity. And I'll give one example. There is a company in California that has, we know the company here in Nigeria that is providing them with kola nut powder in bulk. And they have a nice, packaged, sealed product that they're selling as a healthier alternative to caffeine-driven drinks in California, to the tech industry, and are doing quite well. Nice product, well packaged, healthy substitute for sodas or Red Bull or the alternative, and it's a kola nut-based product. It's effectively kola nut powder that is packaged and exported. So, and it's a California company doing this. So I'm giving that context. And the companies in Senegal and Benin Republic that are also exporting nicely packaged retail Fonio products. And Fonio is the new superfood equivalent. So I think it's to recognize that your market is not necessarily just Nigeria. It is with online sales opportunities as well as Amazon or otherwise, there's a broader global audience. And the other is being attentive to packaging. Because many times people equate locally produced food with poor packaging. And meanwhile, if you're very attentive to that packaging of that product, you really find that reception and perception can be very different based on how that is spun or put forward.
Thank you. There's a gentleman at the back. I think he's moved. I'll take you now.
Good afternoon, all. So it's been an interesting panel. My question is with respect to talking about measuring impact and diversity. I noticed that a significant part of the panel has focused on gender, but I'll introduce another perspective to it, which is in terms of class. In Nigeria, inequality has widened since COVID, and there's more people living in poverty. We are described as the poverty capital of the world. So I would want to hear from, talking about impact investing, you talk about intentionality and all of that. I know Mr. Wale, for example, deferred, thinking that every investment you make in Africa already has an impact. So I agree. There's like a spectrum. So you start with either no impact, or you start with very low impact, and then you have very high impact. But the importance of measuring that impact is very clear. So I want to hear from them in terms of how the investments they've made on the continent in Nigeria, how the level of moving people out of poverty. What has been the story?
Very important question. Let me start with Samira. Did you hear the question? Okay, he said we talked about gender, but there's another inequality that exists in Nigeria's class, class differential. So how have your investments tangibly moved people out of poverty?
Okay, for us, in FX we work across the entire agri value chain, from the processors, from the producers, the farmers, up until the exporters. So we do not discriminate against who we work with or who we finance. For the producers, we grant input finance to them. We give asset-backed commercial papers to the processors. So we do not discriminate with whom we work with in whichever part of the value chain that they are. There's no discrimination with us.
Okay, Mr. Adeosh.
Yeah, he mentioned my name too. He's like, look, so class is a reality, but it's not unique to Nigeria, really, right? I mean, a lot of societies have that same issue. I think when it comes to investing, frankly, if you ever try to raise a fund, you are definitely not generally the top class because of what you have to go through. The pain of fundraising is so tough that somebody who's really done well will not generally want to go through this. It's very humbling. And then if you raise the money, you're going to invest in companies. The companies you invest in are generally companies you want to grow. They're generally small companies, medium-sized companies. Those are not companies that are run by top class, people in top class. And I think if you go down the value chain of that investment, I think you'll find that a lot of the capital that you're providing, you're actually providing to the bottom of the pyramid. And so, to me, I think the more capital that comes in, the more you help the bottom of the pyramid. Because your goal is for these companies to scale, to generate more revenues, and by doing that, obviously, you're hiring a lot more people, and then you're trying to sell. But I don't think the business of impact investing, it's really an issue of class wherever, at least in this part of the world. I think you're going to be doing more good to the bottom of the pyramid overall, is my experience.
Thank you. Because of the time, let me take the questions. One question to Mezu. Someone is asking, Sahel has done a lot of advocacy and investment in food security in Nigeria. Are you satisfied with the results so far?
I think there's only one answer to that, no. There's still a lot more work that needs to be done, and they're very hard problems to solve. And I think it would take a collective effort of not just one firm, but a collective group of key players to actually have an impact.
And there's another question. I don't know if any one of you works in Kogi State, but the Kogi Enterprise Development Agency is asking about collaboration. How can they collaborate? Do I have takers? Mezu.
I have to think a little bit about this response.
Yeah, be careful.
So we've been fortunate to partner with Kuramo and Cardinal Stone in investment in a very large cassava processor in Kogi State. Has a very large amount of land, process the cassava to starch, and we sell that to FMCG. And I think it's very critical as we look to further bring more capital investment to the state to have the support of Kogi. So we'll definitely welcome it, and there are many different things that I think are important. The first is that we actually cultivate quite a bit of land, close to 2,000 hectares, and we'd like to scale that up. And at the same time, I think from a security perspective, there are quite a few security concerns within the state. So things that help alleviate that allows us to work around the clock, 24/7. I think right now in Kogi we work 9 a.m. to 4 p.m. and everybody is rushing back to Lokoja. And if we truly want to be competitive, we need to figure out how do we address this particular issue. I think we've been fortunate, though, that we have a good partner in Kogi, and I think I'll welcome the engagement with the stakeholder offline to speak some more on how we can engage on the state.
Thank you. Now, did you want to add something quickly?
Yeah, happy to connect. I think there is something very exciting to me about the entrepreneurship ecosystems, especially outside of Lagos, the innovations and ideas that are coming from there. And as we said, the populations that are there that have limited access to services, which creates a huge market opportunity. So happy to connect, and we'll see how we can work together.
Great. We're going to end with recommendations from each of our speakers, but I'd like you to do it this way. When I talked about this conference to this convening to someone, they said, but it's always the same people I see doing impact investing. And so in terms of the recommendations, how can we grow the space? I think now that we finally have a National Advisory Board that will be formalized shortly, there is work to be done, clearly, but how, just brief recommendation that can be built on critically by the advisory board and IIF. Let me start with Mira.
Yeah, I have a good idea because I've developed my own small little ecosystem of small entrepreneurs across Nigeria, a lot in Kaduna because that's where I am. And, you know, I think that one thing that would be really valuable would be for the funds to find cheaper ways to do diligence so that you can make smaller investments. Because there are a ton of opportunities at smaller levels with people that have been bootstrapping and that with a relatively small investment could actually make a pretty significant jump in their business. And that, you know, to Neka's earlier point, you know, without overloading somebody with too much capital, you could actually create not exactly 100% organic growth pipeline, but a pipeline, a growth projection, you know, for a trajectory for a company that's maybe, you know, accelerated at 2 to 3x, but not at 100x, right? So it's about finding cheaper ways to do the diligence so that you can find the people that you can invest in, that you can afford to then invest a smaller amount, and then about adjusting your growth expectations to meet those needs of those smaller companies.
You know, if you go back to my initial premise, that we're all doing impact investing, even though we don't call ourselves impact investors. I think, so what do we need to do then? Obviously, I mean, I think adapt some of the structures. I think they're useful, there's no doubt. But I think if you think of a broader universe, just outside of those that call themselves impact investing, and I think there's nomenclature that's changing now. There's like, what's the one that you're in between impact and commercial? Blended finance and all that stuff is all copied into the language. I mean, look, for me, the goal is how do we get more capital to the country to address all our SDG challenges. And capital's in all kinds of places. It's with the impact investors. I maintain there's not that many of them or that much money over there. I see the money with the commercial investors. And I think if you think about commercial investors that are thinking about impact investing, you should think of them as part of that universe, and you can help broaden the universe. I have one pet peeve I have to do though. You know, the gentleman that asked the question the other day mentioned this metric that really always bothers me. Nigerians always like to mention. It's like, he said we're the poverty capital of the world, and that just doesn't compute to me when it comes to numbers. So I say to myself, so they say about 100 million people, so that's 1 out of 2 of us are in poverty. Then I go, wait a minute, if you think about India has about 1.3 billion people. So let's say, even if you say 1 out of 10 people in India are in poverty, that's 130 million people. That's way more than 100 million. For some reason, Nigerians just buy this metrics from everybody and then we don't think about it. It just does not make any sense. India is definitely not 1 out of 10. If India is 5 out of 10 or 1 out of 2, you're talking about 500 million people. Sorry,
Samira?
Okay, for me, one word I took out when Emeka Offor was speaking was the issue of sustainability. So if I was going to make a recommendation, I would say for the impact investors, when you're doing the investments, it should be to businesses that are sustainable. So not just companies that you would give funds to this year, and if the funds for whatever reason is not given the next year, they cannot keep making the impacts that they have made in the first year. So for me, to invest in businesses that's as self-sustainable.
So I know that there have been a lot of comments around this, and I think for less a recommendation, but maybe a way we're thinking about how to approach some of these issues is how do we, across the spectrum, there are different needs and requirements, and you can't necessarily take the same approach of allocating capital to apply to everyone. So how do you enable baskets of capital to target different issues that effectively help create the pipeline of companies coming through the system? And so for us, even within our firm, that's one approach we're looking at, is to create those baskets of capital pools that can help develop that pipeline and enable companies that more riskier but create an impact, then flow through to be more developed and then scale using different buckets of capital.
I think something that Impact Investors Foundation and the National Advisory Board that will work on is access to information. What I mean by that, and I do think the gentleman's comment about class is actually quite important. It was something that came up in agriculture, you know, whenever we were trying to increase the pool of agricultural lending in Nigeria, was that, you know, the people who were making the deals, the bankers, didn't really have a deep understanding of agriculture, grew up in urban areas in general, and were not actually going to farms. I think that has shifted over the last decade or so, but that was about getting more information and, of course, having a pool of capital that provided some risk coverage for them to expand their loan portfolios. And I think there's probably something like that in impact investing to some extent, which says, if you're one of the people who think, oh, the majority of Nigerians X, meaning have access to water, toilets, housing, I don't know who that is, but hello on Zoom. Oh, wonderful. Hello, Your Excellency. Okay, we're going to replay that after, my goodness. So I think if you're thinking, oh, the majority of people are in that same bucket that you might be living in, or in if you're on the phone or here, your perspective is probably very small in comparison to the size of the challenge. And so I think that's one of the things, is providing access to information about what are those investable opportunities and what type of investment are we talking about. Are we talking about a 1.5x return? Are we talking about a 100x return? But what is the range of impact investing opportunities that exist in Nigeria that we've seen from the different funds and the different social enterprises that exist? And let's start spotlighting those. I think that might help people to understand that there is an opportunity, and maybe even that some of what they're doing might have classified as impact investing if they were ready to call themselves impact investors in the first place. And I would say that, unfortunately, we do have the largest population of people in abject poverty, even if we don't have the largest population of people in poverty. We have 12 million or more out-of-school students across the country, out-of-school youth, and that is the largest absolute number of out-of-school children in the world. And so I think the numbers are there, but the narrative is likely more negative than it should be. I don't say this outside of all that happened with Black Lives Matter last year. I think it's quite critical that we are the largest population of Black people in the world. And I think that there is a need to change some of the perceptions on Nigeria, while at the same time we change the fundamentals that unfortunately are helping to drive some of those perceptions. So I think there's a lot of work to do, but we are definitely given a better rep or worse rep than we should have.
Thank you. I'll just end by saying there's a tendency about Nigeria to focus on what is not working. I think everyone in this room serves as an example of what is working, and that we are on the side of the solution providers. So impact investing is here to stay. We need to make it easier for more players to come in, and we also need to spread the word of the successes. We don't tell our stories very well. Other people tell our stories for us, and often they take out the pepper and the salt that is needed for Nigeria. And lastly, to say, COVID has provided a litmus test for impact investing. If it doesn't work now, it will never work. So please let us all engage. Thanks to IIF, and I think the National Advisory Board has its work cut out for it. So please give my panelists a round of applause. Thank you all so much.